Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Shreve here with a breakdown of the action in today's session, where we saw a step in the right direction, but not an all clear signal. And Ken, we got a surprise, some more medical sector stocks to look at.
Yes, indeed. It does appear that's where money is flowing in the market. So we'll take a look at three stocks. Johnson & Johnson, which moved above its 50-day moving average, got a nice dividend yield there. Recent IPO, Privia Health, PRVA, still in buy range. And finally, we looked at United Health yesterday. We'll take a look at Centene in the group CNC, also looking pretty good.
All right, let's do it. First, let's take a look at the major indexes. The Nasdaq up 1.6% by session's end. The S&P 500 up just shy of 1%. The Dow up some 0.6%, and the Russell 2000 up 1.4%. So a pretty decent percentage gain, Ken, for the Nasdaq. We have a rally attempt going, but what do you make of the action that we saw today?
Well, we always go back to how to make money in stocks, and they talk about, when the stock market confirms a new rally, you want to see strength, you want to see conviction, you don't want to see a confirmation of a new uptrend, in just light volume, and so that's kind of what we're dealing with right now. We had a good percentage gain today on the fourth day of a rally attempt. Volume looks to be pretty close to what we saw yesterday, and then when we look through our stock screens, it's not like the market is teeming with actionable setups to buy. So it's nice to see the Nasdaq strengthen late. Again, every time the Nasdaq rallies powerfully, it tends to be the most beaten down stocks that are 40, 50, 60% off their highs that are doing the heavy lifting. So still a little unsure about where this market wants to go, but hey, it was a good showing for the Nasdaq, and we'll see where it takes us.
That's right. I like what you said. Not only do we want that power and strength, but we want something that looks decisive as well. So we'll be keeping our eyes peeled for that.
Yeah, well, it was actually back in the last time we got confirmation of a new uptrend by the Nasdaq. I think it was on May 26th, and we had a nice percentage gain in the area of about 2.5%. But volume, even though it was higher than the prior session, it was still very light, very below average. So typically, when you see a sign of strength, you want to see a nice, big, solid percentage gain. You want to see overwhelming volume to the upside, and you want to see stocks participating, breaking out of good technical setup. So a few ingredients missing here, but like I said, it was nice to instead of a weak open or a strong open and a weak close, we actually saw things strengthen into the close, which was a good sign.
Yeah, definitely an improvement there. And I know we are going to cover more tomorrow morning on IBD Live. This whole concept of follow-through days. We'll be able to answer questions from the audience and really get into it. Since we are early on in this rally attempt. So looking forward to that discussion, along with our special guest, Jim Ropel, who will be on the show. But moving on, let's take a look at the S&P 500 here, trying to get back above that 38,000 level. Not sure if it quite did it. It did not, a couple points shy there. Let's also take a look at the Dow Jones Industrial Average, 0 DJIA, right around its 10-day moving average. Well, that's the other thing too, Ken. All of these indexes still well below even their 21-day lines.
Yeah, so still some overhead supply to work through, and the percentage gains for the Dow and the S&P 500 weren't nearly what we saw in the Nasdaq today, but both indexes did finish near their session highs. But yeah, that's an issue for a lot of stocks and the indexes at this point. Overhead supply, that's sort of selling pressure that arises when indexes or individual stocks try to rally off lows. They invariably encounter moving averages or just selling pressure from those that bought on the way down that are just selling to break even.
And let's also check in on the 10-year Treasury yield, down but off lows below the 21-day line here. So getting close now to another test of the 50-day line, 10-week line on a weekly chart. But this pullback looks very different than the last pullback that we saw in yields.
Yeah, still, you can see that yield closed off lows today. Still holding support at the 50-day moving average. So we'll see if this 10-year note eventually bottoms out around that 3% level. It could just be stuck in a trading range here. But I think part of the reason stocks rallied late was that yield was able to move off lows.
Hmm. Okay, let's talk about those medical sector names, starting off with Johnson and Johnson, J&J. Third straight day of strong gains, up 2.3% today, above average volume as well. Now carving a double bottom base, even potentially triggering a trend line entry and getting back above the 50-day line. So even though there are, in general, actionable setups are in short supply, the most compelling charts we're seeing, no doubt, are in this sector, Ken.
Yeah, that was sort of the flavor of yesterday's stock market today video, and yeah, Johnson and Johnson technically has not crossed the pivot, has not crossed the buy point, but you can see the last time the stock broke out of a double bottom base, it actually fared pretty well when it broke out over that 173 level, ran up over 185. It has pulled back. It's got another double bottom base forming here, but yeah, I mean, I think it gave a buy signal today with that decisive move above the 50-day moving average, a breakout over a trend line. Here's just a good example of how you can get an early entry in a double bottom base, and now we'll see if it can eventually break out over this 180 level, and that can't see the pivot. It's 181.74. It looks like.
Yes, yes,
Yeah.
yeah. I know. I covered it up. I covered it up there, Ken. You had
Yeah.
to guess at that, but you were right on the money.
Yep.
And so, for those who aren't aggressive traders and didn't decide to act today, because we don't have a follow through day yet, there's nothing wrong with sitting on the sidelines. It seems like to me here at this point, if it races again higher tomorrow through that buy point, I mean, that's pretty straight up from that 170 area off lows. In this last double bottom, there was a little bit of a pause before it broke out. So would that be something worth looking for here in Johnson & Johnson's chart before acting?
Yeah, I would say yes, just because of the scope of the gains over the past 3 days. It has come a lot. We were looking at Vertex Pharmaceuticals today, VRTX, and we were a little reticent about getting into that stock only because it had been up sharply 6 out of 7 days in a row. So even though it's technically in a buy zone here, it just felt like we would have been chasing a little bit. So kind of J&J is in the same situation, not quite as explosive a move as Vertex, but 3 up days in a row. So as it approaches that 180, that recent high of 181, it wouldn't be surprising to see it kind of drift lower, maybe towards that 180 level, and could form a handle. But on the other hand, if it really takes out that 181 pivot with really good volume and pretty clear that big investors are in there buying, it's probably worth a nibble.
All right, we'll have to see. And let's take a look at PRVA, Privia Health, a newer issue, debuted back in the spring of 2021. And we can go to the weekly chart just to see it a little better. Had a nice initial pop, but like many IPOs, that first move was short-lived. It's taken a lot of time off, but has been able to find a bottom here and is now breaking out of a bottoming base.
Yeah, really, just a picture perfect example of a bottoming base here. You can see that big blue week right at the low of the most recent base. We would call that a nice solid support week. You can see how buyers came in there and lifted the stock off lows. That's always good to see near the lows of a base. And nice breakout today. Looks to be pretty close to the top of the 5% buy zone, but not quite extended yet. What I like about Privia is that it's a new issue. They came public last year, about 14 months ago, and bless you, had and corrected in price sharply, but just a nice breakout from a bottoming base here. And this is a company with a new product and service that's really driving strong sales growth. They're a cloud-based provider of technology and services to physician practices, helping them operate more efficiently. So like to see new issues flexing their muscle in the early stages of a possible uptrend. So we're keeping a close eye on this one.
Right. Okay, Ken. So it says the stock is in a buy zone. So does that mean I should be putting money to work? Or since this is the first, bottoming base and we're not in a confirmed uptrend yet, what should I be keeping an eye out for on this chart?
Well, first of all, any stocks, like I said, if you're thinking about if you're 0% cash, you have no exposure to the market at all, maybe trying on a few stocks on for size, you wouldn't want to be starting with 10, 15% positions. You just want to start with a little bit. So I think a 2%, 5% position in some isolated opportunities, keeping tight stops is okay in this type of market environment. Or you can really just wait for that confirmed uptrend and then just see what the market is serving up. But I think Privia is actionable here, and I think like the way it's trading.
Yes. And let's take a look at CNC in the managed care group. As you mentioned at the top of the show, a number of other stocks in this group we've been looking at: UNH, Anthem, to mention a few, and Centene here, kind of like J&J, just maybe a little less powerful, working on the right side of a double bottom base, getting above its 50-day line, 3 straight gains in a row, up about 2.2%. Today's move, it doesn't look like had above average volume, but it has seen some volume come in as it's formed the right side of the space.
Well, you're right. It's a very similar looking chart to Johnson & Johnson, another double bottom pattern here where you see that second leg down undercut the first, and it's just below that 87.34 pivot. 3 up days in a row, like you said, not as powerful as Johnson & Johnson, but still like to see the close near its high today and above the 50-day moving average. This one looks like it also could be ready to make a run at that 87.34 high. It could get hit with some sellers as it approaches that area, just like we talked about with Johnson & Johnson. So maybe it'll drift lower and form a handle in preparation for a breakout try. But Centene's another stock looking interesting here.
Yes, it is. And that is it for today, everyone. Ken, thank you for blessing my sneeze. I did mute myself in time.
You
and
did.
It was on a full screen chart, so the audience would have never have known.
Oh, so
That's okay, but I appreciate it. That was so nice of you. So it's live television, right?
Yeah, that's right. That's
sometimes
right.
you got to sneeze, and that's that.
Sometimes you have to say bless you.
Yeah. Well, thank you. And thanks everyone for watching. As a reminder, coming up tomorrow morning on IBD Live, we will have a special guest, and that is Jim Ropel of Ropel Capital. It'll be great to talk to him about stocks that he's keeping on his watch list. I know he's the type of trader that wants to catch a big mega wave, and he also has dabbled in crypto. So we'll have to get his thoughts on the current crypto winter that we are seeing, and so many other topics as well. So join us, investors.com/IBD Live, for all the details. We'll see you there, and we'll see you right back here tomorrow after the close.